Happy Friday, Kate here through the first week of January 2022. Looking at a chart for Mosaic. And this is a fertilizer company. I looked at CF the other day, and these have just kind of gotten my attention because they are showing very strong fundamentals and technicals, and they provide some very good lessons in how to analyze stocks. Okay, so we'll start over here with the fundamentals. You see nice triple digit earnings growth. Now, some of these with the little pound symbol in front there, that means that is the growth. The calculation is above a loss over here in the year ago quarter. So you went from, let's see, in December 19, you had a loss of 29 cents a share, to December 2020, you had earnings of 57 cents a share. And then, of course, over here, very strong revenue growth. In fact, you have some revenue growth acceleration. Now, one thing about these fertilizer companies is that the commodity inputs affect their earnings quite a bit, okay? And the other thing that has happened with some of these is revenue has been higher because they are charging more to customers. They're passing along their higher costs. We've even seen in some of the monthly reports from some of the companies, I don't know that it was Mosaic, but it was some of these I've read about recently, that the unit sales were actually down. So that could have been what happened back here in 19 and 20, but clearly they are doing something right over here, passing along some of the cost to customers, and that's good for their shareholders. Not saying it's so great for their customers, but it is good for Mosaic and for those who own shares here. Okay, let's take a look at the chart. And you see here, rallied to a high over here. That looks like in October, 43.24. Then it pulled back, and that was right around the time of earnings. It started to pull back. And, you know, even if there's a good report, sometimes there's something buried deep in there that Wall Street really doesn't like, and they say, hey, let's sell off a little bit. That's not necessarily a bad thing. I mean, you see right here in the last couple of pullbacks, right? Found support right there at the 200-day line. Same thing right here in this latest pullback, support at the 200-day line. So that does show you that some of the institutional investors, they're not bailing out. I mean, you know, you can always come back here to March 2020, see what a real bailout looks like. And that is not what has happened recently. Okay, so kind of liking what we're seeing over here, just in kind of a cup-shaped pattern on this one. And it is forming the right side of the base. So the technicals on this one are looking pretty good. And by the way, this is a member of the S&P 500, so that can also bode well for a company. I mean, obviously, with a market cap of just $15 billion, it's not a heavy weighting in the index, and it's not going to affect the index at all. But the nice thing about an index component like that is that all the funds that do track the S&P do have to own this company's shares. So that can provide a little bit of stability. The other thing I really like about this that did catch my attention in the screeners, and I've talked about this before in some of my other videos. So you see there's a big expectation when 2021 is reported, which should probably be sometime around February. And we're seeing expectations for 494% growth. That was revised higher. Here's what I really like, though. For this year, analysts are currently expecting 39% earnings growth. That's also been revised higher. And what I had noticed for several months leading into 2022 is that some of the expectations were kind of lower for this year, maybe in the low single digits. And that was because we're looking at some tougher comparisons versus what we saw this year. So for example, in 2020, a lot of companies had lower earnings per share and then rebounded very strong in 2021. So the percentage change was pretty big because that was an easy comparison. Not so much the case this year because of the big earnings growth that happened or was expected in 2021. Okay, so this just remains to be seen. That is one of the screeners I'm looking at right now, fundamental screener, is what do the analysts expect for 2022. Okay, so these are just a couple things I look at. Hope you found that helpful today, and thank you for watching.